All right, folks, a lot of investors concerned about this. We know the ups and downs are inevitable, but still, it's tough. So we brought in Rob Luna, Wealth Academy founder Rob Luna, to help us here. And Rob, before we get to the opportunistic part of markets pulling back, let's just talk about how we got here, what we're looking at. Just how vulnerable do you think this market might be right now?
Well, look, I think there's just been a whole change of narrative. Everybody was expecting, Charles, as you know, interest rate cuts coming into the year, and you start looking at CPI, PPI, that really hasn't played out. Then you get JP Morgan coming out with not the greatest numbers, and Jamie Dimon, what he's talking about. Pretty soon you're going to have the sell in May, go away crowd. So I think, that narrative has changed. I think people are a little bit nervous, but that's to be expected, Charles. And if you're buying when everyone's happy, that's not how you're going to make money in this market.
Though, what's interesting to me is the narrative itself. Like, I don't know how we got to this narrative. For the last 6 months, the question I've always asked is, where do we see, how can you have both? How can you have a super-duper strong economy, a super-duper strong jobs market, and need to cut rates? And the equation never made sense to me. And then, of course, this whole notion that inflation was going down. Inflation hasn't gone down. The rate of growth has slowed, but it's still up, and it's compounding, particularly for most Americans.
Yeah, no, I completely agree with you, Charles. I don't know how they're going to do it. And the truth is, I think if they do it, that's going to be extremely inflationary. So sometimes be careful what you wish for. I think if the Fed comes in and does start cutting, watch out a year or 2 years from now, especially if we get a change in administration, we get some actual fiscal policy coming in. That's not going to be good. I don't personally believe the Fed does need to cut rates, but that doesn't matter if the market believes it does. And that's what I think we're trying to wrestle with right now, is that psychology of, can we do okay without the Fed coming in to save the day?
Well, can we? Listen, honestly, to be quite frank with you, listen, Alan Greenspan maybe set this in motion, the so-called maestro. He came in, he saved the day after 87, which, by the way, that Black Monday was the roughest day in market history. But we've become so accustomed to the Fed coming in that so many people have taken their eyes off of things like fundamentals. You still believe in fundamentals. Ultimately, is that what folks should be focused on, knowing what you own and knowing when they're on sale?
Yeah, at the end of the day, Charles, like the old saying is, it's a market of stocks, not necessarily the stock market. And one of your guests was talking about technology, energy. Look, there's companies that, irrespective of what's going to happen with the overall economy, like technology, are going to continue to do well because they're going to create efficiency, they're going to create economies of scale. So I think in these types of environments, I guess like always, you have to look for individual plays that are going to be able to do well. And I think there's a lot of names out there that investors can hang their hat on.
All right, let's talk about a couple I know you like a lot. I got to go with Netflix. Now, I had Netflix. We closed it out for a huge gain. What is it that you like right now about Netflix? What makes it a buy right now?
Well, look, Netflix has some tremendous momentum going for it right now, but what I really like is what you're seeing Reed Hastings do. I call it his Jeff Bezos moment. He's realizing that he has to expand beyond just his core audience. He's getting into gaming, which is great right now. You're starting to see some advertising. And what I really like, though, Charles, is they've created this platform just like Amazon did years ago, where I think there's many more levers that they're going to be able to pull. And so I think if you look at this company, $250 million company, $1 trillion company right now, I think this could be the next $1 trillion company 5 to 6 years from now. A lot more levers to pull. It's got some great momentum. Netflix is a name I really like right here, Charles.
All right, we're talking about a three-bagger. You always get us salivating there. Hey, I got less than a minute to go. Let's call it 40 seconds. Yeah. Apple, a lot of folks have kicked Apple to the curb, said they missed the AI thing, that it's going to be a while before they're a player again. You think, no, that's sooner rather than later?
Yeah, they're coming in. Like, they're talking about chips for AI. And I think that's, look, the iPhone, how many new cameras can you make and get consumers excited about it? And you're not going to necessarily upgrade for that. But now if there's AI being put into the phone, you're going to get a FOMO. No one's going to want to miss out on that. That's going to upgrade their cycle. The stock is down. It's trailing the S&P. Apple's not going anywhere. You've got to buy a company like Apple when it's underperforming, not when it's outperforming. It's pulled back nice, still down about 10% year to date. I've been out of it for about a year. I just got back in earlier this week. I think Apple sees 220, 225 in the next 12 months.
Great stuff, Rob. Hey, thank you so much, my friend. Talk to you again real soon.